Lindian Resources is on the precipice of a company-making year as it continues to make significant inroads at its flagship Kangankunde rare earths project in Malawi. The company's recent progress has centred around accelerating development on its Stage 1 processing plant. However, recent rock chip samples have shown the scale of the Kangankunde project, nicknamed the King, could be even bigger than first envisaged. The potential north-south strike length of the mineralisation has increased from 1 kilometre to 2.5 kilometres, and underpinned by high NdPr ratios, excellent grades and non-radioactive material, the expanded footprint is consistent with the central Kangankunde deposit, where a maiden mineral resource estimate was declared in August 2023. Lindian has described this progress as the perfect storm for Kangankunde, and as the global supply and demand forces driving recent fluctuations in rare earth prices continue to recalibrate. In a February 2024 research report, Goldman Sachs forecast NdPr prices to rise from a current level, around US $55 a kilo, to a range between US $60 to $70 a kilo over the next 12 to 24 months. The Goldman analysts also maintain their forecast for prices to return above US $80 a kilo over the medium term, driven by demand for EVs and wind power, along with capacity bottlenecks for rare earths refining outside of China. It's against this backdrop that the project, dubbed the King, stands head and shoulders above others, and according to Far East Capital's Warwick Grigor, Lindian has significant leverage to a rare earths price recovery.
Well, the biggest advantage of a high-grade deposit, if the price of a commodity falls, the break-even cost of a high-grade deposit is much lower than the lower-grade ones. In terms of survival, and that commodity price falls 80%, a lot of projects would be in jeopardy in that case. But with Lindian, they've got a much better buffer. They can survive in a low-price environment where so many other companies will just go broke. That's the biggest advantage. As the price stays down at these levels, the potential competition just falls by the way, and Lindian could well be the last man standing, so to speak, because of that massive grade advantage it's got.
As development on Stage 1 progresses, it also shines a spotlight on hard rock rare earths projects like Kangankunde and how they compare to the complexities of clay rare earths projects elsewhere in the world.
With something like Kangankunde, it's about crushing and grinding and then getting a concentrate. The material handling is a lot easier if you don't have a lot of clays and viscosity to deal with. So Kangankunde is really a very conventional gravity separation proposal as opposed to the more complex metallurgy with the clays and particularly the rare earths. So I'd say simplicity is the big advantage that Lindian's got here.
Kangankunde has consistently been referred to as one of the best prospective rare earths projects in the world due to the excellent grade, scale and largely unencumbered offtake. And, according to Warwick, the added potential scale could pique the interest of larger global players wanting to enter the rare earth space.
Well, if you look at the potential, Kangankunde could be a 100-year mine life quite easily. It's got the grade, and once it gets up and is producing, it can undercut just about anyone else in the market. So they'll have a dominant position vis-a-vis any other project that wants to start up. If someone like BHP or Rio want a serious world-class long-life asset, and Kangankunde presents itself as probably the most attractive opportunity available. So it's not going to stay with Lindian forever, that's for sure. You'll find the big boys decide that this is such an attractive project, they'll want to come in and get a slice of the action, whether that's a takeover or a joint venture, who knows. But it's certainly a premium project that'll be sought after by anyone who wants a big position in this industry.
For its next round of key development milestones at Kangankunde, Lindian has flagged an updated mineral resource estimate that will convert part of the project to indicated status, alongside ongoing development works for the Stage 1 processing plant ahead of a forthcoming feasibility study. With a busy near-term calendar, Warwick believes there are a number of major catalysts that could precipitate a re-rating.
The biggest catalyst for a re-rating is obviously the rare earth price going up. I think that in times like this, you get a consolidation in the industry, that a lot of hope will fall by the way. A specific event, well, if they can come out and be a producer sooner rather than later with modest capex and good operating, once investors start to see that, once they bring out an indicated resource so they can release official numbers that you're allowed to talk about, that's when it'll start to become more real. My numbers, they're my estimates. I do the best I can, but they probably don't carry as much weight as what an official announcement from the company would carry.
But in terms of peer comparison, one critical attribute sets Kangankunde apart from the other hard rock rare earths projects in the world.
Well, again, you go back to grade. If you've got something like Hastings has got, it's about 1%. And you need economies of scale, you need volumes. That brings in higher capital costs. More funding is required. So generally, it's more complex. That's the biggest difference. When you've got high grade, grade is king. You've got so much more flexibility. You can tailor your production rate and your more selective mining if necessary to survive downturns. Whereas something like Hastings, they're sort of locked into a bigger picture and it's harder to change. So that's the biggest difference. With a lot of the clay deposits, you have some people saying they've got ionic rare earth, some people have got clay deposits. The fact is there's a lot of rare earth material out there in the ground, but so many of the companies just haven't got a handle on what the costs will be, let alone the metallurgy. It just doesn't have the attraction of the high grade and the simple processing circuit. More complicated. The Chinese recover a lot from clays, but it's a very polluting recovery method. And anything in a Western world, for example, needs to be very careful that they don't tread on the environmentalists' footsteps, whereas that's the biggest difference. And I think the speed at which Lindian can get the project up and running is good. I note that ionic rare earths are doing a good job in Uganda, but for some reason the market seems disinterested in that. There's a lot of incomplete information out there with all these other companies. They're not as far down the track, so it's harder to draw too many comparisons, but you can easily compare the scale and the grade with Hastings. And I've mentioned Hastings because that's one that's attracted a lot of attention, a lot of funding. It's had a high profile and it's hard rock. So you can make meaningful comparisons with that one.
With a bevy of milestones on the horizon, Lindian certainly fits the bill of a company that should be on the radar for many astute investors.